China's Caijing magazine claims that more than 20 banks went out of business in the country. More than 20 small and medium-sized banks have merged or restructured since 2020, according to the report. In recent times, one of the bank shares has been put up for sale, but 60% of them remain unsold. A common occurrence in China National's current banking stock auction market is the auctioning of unsold lots that have not yet been sold. Looks like the bank's share auction gets failed for three key reasons. The bank's operational circumstances and future prospects are the most critical. Small and medium-sized banks are under significant operational strain due to the effect of the economic cycle, external shocks, and strong market rivalry. They are plagued by issues like poor asset quality and a lackluster operational capacity. Other provinces' small and medium-sized banks are likewise consolidating and reorganizing. In 2021, China's Banking and Insurance Regulatory Commission approved the merger of YouNik Coastal Bank with Liaoyang Bank, a provincial city commercial bank. 10 more city commercial banks, such as Huludao Bank, Fushan Bank and Fushan Bank, would be consolidated by the Liaoning province government in the future. Although several combined units have defaulted in the recent wave of small and medium-sized banks mergers and restructuring have become an effective strategy for small and medium-sized banks with high risks to improve their financial condition. In the research, small and medium-sized bank mergers were expected to continue through 2022. 11 key financial reform measures were released in May 2020 by the State Council's Financial Stability and Development Committee, including a fundamental reform of small and medium-sized banks. In order to successfully execute the plan, small and medium-sized banks must combine and restructure. With assets totaling 28% of the overall banking system, there are around 4,000 small and medium-sized banks in China. As economies throughout the world grow, so do these types of financial organizations. To better understand how small and medium-sized banks should grow, regulators have made more specific statements in recent years. Small and medium-sized banks, as well as regional banks, are limited in their ability to do business throughout the country. They also tend to concentrate on small and micro firms, agricultural, rural regions, and farmers, and personal financial services to satisfy the requirements of local businesses and inhabitants. Large state-owned banks continue to drown with low-interest loans even as regulations favor the growth of inclusive finance, which has had a substantial effect on the operations of small and medium-sized banks. The capital, clients, payment systems, cross-industry, and IT teams of small and medium-sized banks are at a disadvantage. When it comes to employing digitalization to generate new features, small and medium-sized banks are in a conundrum, yet their posture to serve local individuals and small enterprises cannot be messed up. SMBs should avoid banking on large accounts, which might be disastrous to them if they fall victim to a single burst project. Small and medium-sized banks may be protected by limiting their operations to the local region and encouraging them to serve small and micro clients. More than 1,400 commercial banks are located in China's rural areas. China's commercial banking industry has a total asset base of 90 trillion yuan, accounting for around 32% of the total, $14 billion. That's almost as huge as the whole banking system in the United Kingdom. 6 national-level banks and 12 joint stock banks dominate, all of which are majority-owned by the government and hence have the highest public exposure. Major private investors have taken ownership holdings in smaller banks, unlike the bigger institutions. These investors have had a significant impact on smaller financial institutions. Bad debt, risk management failings, and insider deals plagued certain banks during the previous decade. The Northeast has one of the largest percentages of privately owned homes in the nation. For example, 8 of Liaoning Province's 15 city commercial banks are privately held. As a result, efforts to consolidate were made. It was after the HNA crisis that the YouNik Coastal Bank became the focal center of the Liaoning-wide consolidation campaign of banks. Regulators attempted to consolidate 12 of Liaoning's banks at the start of the process. As a result, this goal was lowered to only 2, with YouNik included. If you like this video, make sure to give this video a thumbs up, comment on it, and if you haven't already, subscribe to stay up with the latest videos and developments.